Welcome back to today's in-depth breakdown of Cardano as we move through February 15th, 2026, a period that is beginning to show the first meaningful signs of life after several punishing weeks of sustained selling pressure. And right now, ADA is trading around 26.5, reflecting a modest gain of nearly 2% over the past 24 hours, which on the surface appear minor, but in the broader technical context represents an important stabilization phase, especially considering how aggressively price was rejected in previous sessions. And the true focal point of the current structure is the 25-cent level, a zone that has now been tested multiple times and has consistently held firm, effectively forming a clear double-bottom pattern on the 4-hour time frame, a formation that historically signals potential exhaustion of sellers and the early stages of accumulation. And what strengthens this developing structure even further is the noticeable 10% spike in trading volume, a metric that strongly suggests that larger market participants, often referred to as smart money, are no longer passively observing from the sidelines, but are instead actively stepping in at these suppressed levels, reinforcing the historical significance of 25 cents as a major accumulation zone where long-term conviction typically begins to outweigh short-term fear. However, it is essential to clearly state that all information presented here is for general informational and educational purposes only, and does not constitute financial, investment, or legal advice, as cryptocurrency markets remain highly volatile, unpredictable, and inherently risky, and anyone considering participation should conduct independent research and consult with Ethon. I'm not a licensed financial advisor before making decisions, since no responsibility is assumed for financial losses and all trading activity carries personal risk. And moving forward into the technical indicators, the relative strength index on both the 4-hour and daily time frames is currently positioned in the high 30s range, approximately between 35 and 40, which historically places ADA in what traders often define as a buy-the-dip zone, signaling that the asset is nearing oversold territory and statistically increasing the probability of at least a short-term relief bounce. While simultaneously, the 50-day and 200-day moving averages remain sloped downward, confirming that the broader macro structure is still technically in a long-term bearish phase, yet momentum is clearly decelerating. And this is further supported by the narrowing of the Bollinger Bands, a compression pattern that typically precedes a significant volatility expansion event, meaning that a decisive breakout, either upward or downward, may be approaching sooner rather than later. And again, the 10% increase in volume reinforces that accumulation activity is occurring at these discounted prices, with buyers quietly absorbing available supply as price continues hovering between 26 and 27. Where minor stabilization has occurred over the last 24 hours with a smaller intraday gain of roughly plus 0.41%. Yet, the more meaningful development remains the resurgence in participation reflected by elevated volume levels that indicate returning market interest rather than apathy. And when examining the MACD indicator, we observe shrinking bearish histogram bars, signaling fading downward momentum and the gradual loss of control from sellers, suggesting that bearish pressure is weakening even though a confirmed bullish crossover has not yet fully materialized. And from a structural standpoint, the most critical support remains firmly anchored at 25 cents, a level that, if broken decisively, could open the door to a rapid decline toward 22 cents, which represents the next major liquidity pocket below. Whereas on the upside, the first substantial resistance zone to monitor is 30 cents, a psychological and technical barrier that must be reclaimed with a strong daily close in order to confirm that the short-term bearish trend has transitioned into a neutral or potentially bullish phase. And in the immediate term, the 26 cents region itself is acting as a psychological floor, reflecting market hesitation but also resilience. While on higher time frames, including the daily chart price action, is compressing into a consolidation base pattern that typically forms before larger directional expansion, and beyond pure technicals, the fundamental and social catalysts surrounding Cardano are also contributing to renewed optimism, as community engagement on X, formerly known as, has increased significantly following confirmation of the Layer 0 integration, an interoperability upgrade designed to connect Cardano to more than 50 external blockchains, dramatically expanding cross-chain liquidity pathways and utility potential. And this development was further reinforced by comments from during his appearance at 2026, where he highlighted not only the interoperability milestone, but also the anticipated launch of USDCX, a privacy-enhanced stablecoin scheduled for release toward the end of February. Developments which have collectively revitalized community sentiment at a time when price action alone had been discouraging, and on-chain analytics provide additional validation of this shifting sentiment, as data confirms that whale addresses accumulated more than 450 million ADA during the recent dip toward the 25-cent floor, signaling that large holders and potentially institutional participants view current valuations as strategically attractive for long-term positioning despite prevailing bearish narratives. And when we integrate these technical, on-chain, and fundamental factors together, a broader picture begins to form in which ADA appears positioned within a high-reward yet moderate-risk zone, particularly for traders willing to manage downside exposure responsibly, as short-term participants may consider maintaining tight risk controls such as a stop-loss near 245 cents to protect against structural breakdown, while longer-term holders may interpret sub-27 pricing as historically discounted relative to previous cycle valuations, especially when factoring in expanding ecosystem interoperability and visible whale confidence. And if bullish momentum successfully builds and price secures a decisive daily close above 30 cents, the pathway toward the 30 to 034 resistance corridor becomes increasingly probable, representing a meaningful relief rally target in the coming weeks, provided broader market conditions remain stable. Yet it must be emphasized once more that cryptocurrency markets are inherently volatile and susceptible to rapid sentiment shifts, macroeconomic catalysts, and liquidity shocks, meaning disciplined risk management, position sizing, and emotional control remain paramount regardless of conviction level. And in conclusion, ADA currently stands at a technically critical inflection point, defined by resilient support at 25 cents, strengthening accumulation signals, fading bearish momentum, narrowing volatility bands, rising volume participation, expanding interoperability prospects, and substantial whale accumulation, all of which collectively suggest that while confirmation is still required above 30 cents to validate a definitive trend reversal, the groundwork for a potential recovery toward 34 cents is being methodically constructed beneath the surface as February 2026 unfolds. Thanks for whacking hits like and subscribe to the channel, and see you the next update.